Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD extended the gains further in the past days following strong US data and a slightly more hawkish Fetcher Powell. The US ADP and Q2 GDP surprised both to the upside, and Fetcher Powell didn't open the door for a cut in September as was expected, but dodged the questions by saying that they would look at the totality of the data. This has caused a hawkish repricing in interest rates expectations, with the market now seeing 35 bps of easing by year-end compared to 47 bps before the data in Powell's speech. The focus today will be on the US NFP report. Fetcher Powell mentioned that they are focused on the unemployment rate, so that's going to be the one to watch. On the JPY side, the BOJ left interest rates unchanged and revised inflation forecasts higher as expected. The yen didn't move much on the decision but was then sold across the board as Governor Weta downplayed inflation risks and didn't sound concerned about the exchange rate at all. For more GPY appreciation, we will likely need weak US data to increase the dovish bets on the Fed, or higher inflation figures for Japan to price in more rate hikes than currently expected. Other potential positive driver could be signs of more fiscal support, as that will likely put upward pressure on inflation. Now on the daily chart, we can see that USD JPY eventually broke through the key resistance around the 148.30 level and extended the gains into the 151 handle. The sellers will likely step in around these levels with a defined risk above the 151.20 swing point to position for a pullback into the 148.30 level. The buyers, on the other hand, will look for a break higher to increase the bullish bets into the 155 handle next. On the 4-hour chart, we can see that we have this upward trend line defining the bullish momentum. If we get a pullback into the trend line, we can expect the buyers to lean on it to position for a rally into new highs. The sellers, on the other hand, will look for a break lower to increase the bearish bets into the 142.35 level next. On the 1-hour chart, we can see that we have this minor upward trend line defining the bullish momentum on this time frame. The buyers will likely continue to lean on the trend line with a defined risk below it to keep pushing into new highs, while the sellers will look for a break lower to extend the pullback into the next trend line. These red lines define the average daily range for today. For the upcoming catalysts, today we conclude the week with the US NFP report and the US SM manufacturing PMI.